Could this be the biggest wealth creation opportunity of our era? No, not the actual gold bar, gold tokens, real estate tokens, fine art tokens, collectible car tokens. It's the next evolution in how we invest. Tokenization. It turns any real-world item into a digital asset that can be traded by anyone. And the technology behind it, the same that supports cryptocurrencies, like Bitcoin. Let me explain how you can get a piece of this opportunity. Here's your Moniify Playbook. We could see $16 trillion worth of tokenized assets by 2030. To make the most of this, you need to understand three key things. First, what is tokenization? Generally, it's the process of creating a digital twin of a real-world asset. It could be anything from financial products like shares and bonds to collectibles and real estate property. It could also be an idea, like a patent or intellectual property. Basically anything with ownership rights. Take this gold bar, for example. With tokenization, you can break it into smaller parts that anyone can invest in and say that they own a small piece of this bar. How? That's my second point. Thanks to blockchain technology. A blockchain is like a shared notebook. It's considered more secure and trustworthy because everyone has access to the record of transactions and entries made on-chain. And no one can change that information without a majority noticing and agreeing first. Essentially, the ownership rights to this gold bar are represented as tokens on a blockchain, allowing these tokens to be traded. Investors trade on a device called a crypto wallet, which can be accessed via 24/7 marketplaces or exchanges like Binance and OKX. Now, why does this matter? This is point 3, partial ownership. So you own this gold bar, right? And you want to release some of the value to invest elsewhere. Well, with tokenization, you can sell just a fraction of the digital twin without having to physically cut off a piece of the bar. So tokenization hopes to open up lots of investment opportunities by making it easier and cheaper to trade at any time. Plus, large value assets can become much more affordable. And that's why there's so much excitement around tokenized assets.
This token economy is a 24/7, 365-day-a-year phenomenon. These tokens are traded constantly. It's open and democratized, meaning if you're a taxi driver, a goat herder, a hedge fund manager, you have access to these new digital tokens.
Like gold-backed tokens. Demand is growing fast. Recently, the total value of tokenized gold reached $1.5 billion. Even global banking giant HSBC began offering digital gold to its retail customers. Although the gold tokens are not fully tradable yet, this could be seen as a sign of tokenized gold going mainstream. And you can check out the performance of the top gold-backed tokens on sites like CoinGecko. And we will add the 3 biggest by market cap to our Moniify Playbook. Of course, like any digital asset, regulation is changing, so it's important to read up on compliance when investing. However, the area with the most demand for tokenized assets right now is financial products. Bonds, stocks, mutual funds, and private credit.
We believe the next step going forward will be the tokenization of financial assets. Every stock, every bond will have its own, basically, CUSIP. Every investor, you and I, will have our own number, our own identification.
BlackRock recently launched a tokenized money market fund on a blockchain. And big banks like JP Morgan are pushing ahead to convert more of their business to their own private blockchains. And in the past few years, financial institutions in Southeast Asia and the Middle East have also experimented with tokenized assets. Singapore's DBS Bank offered treasury tokens. The Philippines government tokenized sovereign bonds. And the central banks of Thailand, the UAE, and Saudi Arabia are working with the People's Bank of China and the Hong Kong Monetary Authority to tokenize cross-border payments. Eventually, some of that experimentation will stick. Why? Because the cost to run on-chain funds is simply less expensive.
That's why Wall Street is so much in love with this, is that they're saving hundreds of millions of dollars every quarter by eliminating the clearinghouses, by streamlining, by smart contract of the dividend payouts. They're just simply, it's an automation exercise.
One company in Singapore, InvestX, provides services to help investors tokenize assets and also to purchase them. only accredited investors can use this service. But it is a sign of increasing demand for tokenized assets. I'll add Investax and these other companies to the playbook. Large-scale tokenization will depend on more people having crypto wallets. You see, you can't hold a tokenized asset without having a crypto wallet, and unfortunately, it's just not the norm yet. But in places like Turkey and Nigeria, where local currencies are unstable, tokenization is picking up, particularly in the form of stablecoins, which are tokens that aim to protect people against inflation. You see, stablecoins are tokens pegged to a currency like the US dollar, or a price of a commodity, such as gold, to offer price stability. So thanks to stablecoins and some other real-world assets being tokenized, crypto wallet rates seem to be going up. And this is encouraging tokenization even in the world of collectibles.
Ever dreamed of owning a Warhol or a Picasso or even a Dali?
Well, just like we tokenize gold, we can also tokenize art and benefit from its potential appreciation and value. The company 10101 Art is doing just this. While the physical artwork is exhibited in a gallery in Dubai, the online platform verifies and tokenizes the art for interested buyers. Like, you could buy a token for this Andy Warhol for $250 while the piece itself is worth anywhere between $200 to $300,000. Then if you choose to sell the token, the piece itself would not move. Only the token would be sold to signify the transfer of ownership. Sounds pretty cool, right? But remember, you aren't getting to exhibit this piece in your house. You're only getting to benefit from its potential appreciation and value. And given that the value of art at auction houses has increased almost 7-fold in the last 20 years, many investors see art as a long-term investment with potentially high returns. What's yet to be proven, however, is how big the demand for tokenized collectibles can really get.
Bradley Martin, on behalf of the Poker Pets.
I do believe in a world where all financial assets can be and should be tokenized at some stage, including gold. I just think right now we are experimenting on the tech, and we're not thinking about how do we actually deliver this product in a way that actually solves a problem.
Investing in tokenized assets comes with risks. If your account on the marketplace is hacked, or the exchange holding your tokens goes under, you could lose your assets. Plus, the laws around tokenization are still evolving, so like any investment, it's always best to do your own research before you hit buy. For example, Singapore regulates security tokens like regular securities, while in India, there are no clear laws yet, so they can't be legally traded there. But tokenization is growing, and I believe that we'll see more and more assets connected to a blockchain. I'll leave you with your full playbook so that you can research these potential investment opportunities. The links to the sources and the companies are in the description below. And I want to know, would you invest in a gold-backed token or an art token? And can you imagine living in a fully tokenized economy? Share your thoughts in the comments, and don't forget to like and subscribe to keep up with the Moniify Playbook.